Hey, what's going on, family and friends? Today was a huge win for the XRP community. Bitwise officially launched their Spot XRP ETF on the New York Stock Exchange under the ticker symbol XRP. To mark the occasion, Bitwise hosted an XSpace featuring their CIO Matt Hougan, Ripple's CTO David Schwartz, and Crypto of America host Eleanor Terrett. It doesn't look like Bitwise recorded the production, and I've gotten a ton of messages asking for the replay, so here's a clip or two from the conversation. Once again, congrats to our XRP family on the huge win. Thanks for tuning in. Love you mucho.
I've heard for many years that it's the speed, it's the cost, it's the settlement mechanism for cross-border payments. That's what the token is known for. Would you say it's one of those, or is it something else that distinguishes XRP from Bitcoin, Ethereum, or Solana?
I think XRP occupies a unique niche between Bitcoin and Ethereum. XRP is the first blockchain built on anything that wasn't a clone of Bitcoin or Bitcoin itself, dates back to 2012. Doesn't use proof of work, it uses what we now call proof of association. It was the first ledger to have tokenized assets, at the time called issued assets, used for things like stable coins. It has a native decentralized exchange to allow people to move between assets. I think the value proposition of the XRP ledger for XRP is a curated set of financial primitives. So rather than the sort of free-for-all of platforms with smart contracts or the very, very limited functionality of something like Bitcoin, the XRP ledger has a set of financial primitives to provide useful services. We see it as a public good. We see it as something that you can't partition off or own. And these features include things like escrow, decentralized identifiers, decentralized exchange, and so on. And so it's a platform for enterprises to do business.
Can you describe some of the other use cases, I guess, aside from making cross-border payments faster and cheaper, I guess, aside from the financial side of things, the payment side of things, some of these other use cases on the XRP ledger that are requiring the token itself?
So XRP has a unique position on the XRP ledger. It's the only asset that you can use to pay fees. It's the only asset that everyone can hold. It's the only asset without a counterparty. It's used as a bridge asset when two tokens don't have a direct trading pair. So if you're trading between two assets where there aren't a whole bunch of people who want to trade in the other direction, the network will automatically route the trade through XRP to improve speed or pricing. You don't necessarily see it as a user, but XRP does work behind the scenes to make those markets more efficient, and that as an XRP holder in the form of increased liquidity and increased ability to trade. There's settlement for tokenized assets like real-world assets and stablecoins. They frequently need a neutral asset to settle between them. XRP acts as that settlement layer, making exchange between these assets smoother and more cost-effective. And it's not tied to any jurisdiction, so it can be held. It can easily be acquired and held by anybody versus stablecoins, which have ties to jurisdiction. XRP provides liquidity across pairs on the DEX and order books. And then there's also cross-chain liquidity, like with the XRPL EVM sidechain and cross-chain protocols like Axelar provides. So XRP can be used in other ecosystems as collateral, as liquidity. So there's a broad range in multi-chain DeFi. And I think what we're starting to see growing in newer use cases around the permission DEX for institutional trading. So institutions can trade on a DEX while still meeting their compliance obligations, settling directly on the ledger, with the ledger providing liquidity and settlement. And then the lending protocol. And one of the most key TradFi functions is being able to lend and borrow money. And I think it's interesting as a lender, particularly because it gives you the ability to get a reasonable return for an investment of capital. XRP can be used for collateral because it's fast, low cost, and native, and it's likely to be one of the more commonly used options. But the protocol will support using other assets.
So you see more demand as the demand from institutional investors perhaps rises through the ETFs. Do you see that affecting the role of XRP on the ledger, perhaps just being used more, perhaps used more for collateral in these more traditional financial vehicle type ways?
I definitely think so. I think we're in the early stages of DeFi. Most of the use cases were focused around the speculative trading of digital assets, which it's a good thing, but it's nothing compared to the whole TradFi space. And so I think as we bring these institutional use cases into the ecosystem and onto the ledger, you're going to see that kind of growth of the use of XRP.
And are there any metrics that institutional investors can use to track the utility of XRP?
I think the big one is the market cap is obviously a huge metric, currently, $127 billion. I think looking at adoption by institutions for real world assets, companies like Guggenheim Treasury Services, Ondo Finance, Aberdeen, Franklin. The number of transactions processed is something like 4 billion transactions that the XRP ledger has processed, settlement speed, which is just a couple of seconds. The number of new users coming onto XRP ledger, I think 500,000 new users brought in this year alone just from Zaman, which is just one wallet platform. And then I think we're going to be able to see, like, how do the ETFs do? How do companies like Evernorth and the digital asset treasury companies do? I think those metrics are going to be, is there institutional interest? Is there growth? And so I think, and then the growth of DeFi ecosystems on the XRP ledger, like Uphold, Axelar, Doppler, and those other companies, to see the number of tokenized real-world assets. The XRP ledger just broke into the top 10 platforms for tokenized real-world assets. And so we'll see all those metrics.
Awesome. All right, Matt, I'm going to circle back on this question about retail versus institutional. I mean, we have, let's see, 2,500 listening right now, and I'm sure a lot of those listeners are members of the XRP community, XRP army, whatever we like to call them. It's a passionate community, as you mentioned in the beginning. I'm curious, I wonder what the level of buying is that you see for this ETF. Is it coming from the retail side, at least initially, or perhaps for a longer time period on the brokerage platforms, or are institutions going to drive most of the flows for this ETF?
Yeah, great question. The answer depends on your time scale. So on the day that an ETF launches, what you typically see in terms of buyers are retail investors and hedge funds. And the reason for that is that they can move with the push of a button. If you compare that to, say, a financial advisor, they may need to check with their client to see if they can move them into a new asset, or they may need to talk to their investment committee, or they may need to due diligence the ETF. All of those things take time. They can take a day, they can take a week, they can take a month. For a large national account platform like Morgan Stanley, they could take a year or more. So that is a slower burn. So you typically see day one, it's hedge funds and retail. And that is your initial bolus of interest, trading, and flows. And then you have this much slower burn of institutional long-only adoption that eventually becomes the dominant driver of an asset. But at least out of the gate, it's very important to have retail and institutions. I should say something that's obvious to ETF lovers, but maybe worth reiterating. One of the beautiful things about ETFs is that you as a retail investor can buy the same ETFs that the Harvard Management Company, that the Abu Dhabi Sovereign Wealth Fund, that the largest institutions in the world get used to get exposure to crypto. So you do have both use cases, but for sure, initially, it's the fastest moving investors, which are retail investors and hedge funds, that you see moving into assets on day one.
Interesting. And then given that retail enthusiasm, how do you assure maybe cautious IRAs that the support that you're getting reflects genuine utility rather than just like initial retail hype?
Yeah, you have to have a conversation with them about the nature of the asset and the nature of the opportunity. With something like XRP, I think you spend a long time talking about the incredible efficiency of the blockchain, the incredible low costs, the business type orientation, enterprise style applications that you see. And I think when you do that, they start to see that this is either one of the crypto assets that they want exposure to, or maybe one that they want to overweight in their portfolio. It won't be every investor that decides this is for them, but it will be a number. It starts with education. One of the things about Bitwise is we have a 20 plus person sales team. They do 15,000 meetings a year with institutional investors. And XRP won't come up in every one of those meetings, but it will come up in a number of them. I'll tell you that when I go and meet with the largest financial advisors, XRP does come up. They want to know what we think. And now we can tell them, and now we have a vehicle that they can use to express that view.
Mm-hmm. Let's talk structure and value prop of owning XRP in an ETF, because you just mentioned some of the cool features is that you can buy an ETF along with some of those big hedge funds, those big sovereign wealth funds are buying the same products that retail products can now buy as well. But beyond custody and being able to say, hey, I don't have to manage this thing all by myself, what are some of the specific benefits the ETF structure provides to investors compared with holding the asset directly? And maybe you could speak to it from both a retail standpoint and an institutional perspective.
Yeah, sure. From a retail standpoint, I think it's pretty simple. For one, it's in a brokerage account. So many people have money in brokerage accounts, whether that's taxable or retirement income, and they want crypto exposure in those accounts. And so having a ticker you can buy, a ticker like XRP, makes that easy. And then it's nice to know behind the scenes that it's institutional custody with a qualified custodian, that a firm like Bitwise has 130 people and all they do is crypto. So they're always evaluating the best custodians. that they trade it with some of the best institutional trading firms in the world. Our portfolio managers come out of places like BlackRock, and we trade with Jane Street. And you get all of that in an easy ticker, that the expense ratio is less than 35 basis points a year. It's a pretty good package. For more professional and institutional investors, there are other advantages as well. If you're a financial,
I think what's going to happen is over the next couple of years, that institutional adoption is going to make possible a mass retail adoption. I think you're going to see blockchain technologies replacing significant fractions of traditional finance for ordinary people as soon as it can provide the products and services that they need. If you think about what the financial products and services people need, like they need loans, they need sensible investments. As soon as blockchains can provide that, I think people will see the benefit of having a sort of open system, like how the internet replaced proprietary information movement systems. So I think we're going to see that growth of retail DeFi just turbocharged by the enterprise adoption we're seeing now.
Alrighty, and Matt.
I love that. I would add on that if you spend time studying how painful and sclerotic the existing financial infrastructure is, you'll quickly come to the realization that it does in fact need to be dramatically upgraded. I think XRP will be part of that. I just call out something David said previously as well. He talked about proposed potential changes to the XRP ledger and how that will evolve over time. I think a mistake that people make generally when evaluating crypto assets is freezing them in amber and thinking that is the end state. Many of the questions that people raise about individual crypto assets will be addressed over time. So I think the thing to look at to see if a blockchain is valuable is, does it have a strong community? Does it have strong technical developments? Is it doing interesting experiments in these real world use cases, which are going to grow dramatically over the next 10 years? And I think when you look at XRP, the answer to those is yes.
But you would say, Matt, having XRP now in an ETF in two places and soon to be more, it does tie together the notion that it is now probably up there in the tokens next to Bitcoin, Ethereum, Solana, all the ones that are maybe in the minds of the rest of the crypto community, like legitimize. It's come onto Wall Street. It's finally here for the people in the XRP community.